Mike Chacho, King God, what it is.
I don't even know, bruh. This I don't even know, bruh. This I don't even know, bruh. This I don't even know, bruh.
I don't even know, bruh. Yeah, y'all know what time it is. Time for us to crank up, time to tune in. It's Mike Chacho.
Yo, what's good? Where are you tuning into the I Don't Even Know Bruh podcast with your host King God and your other host Mike Chacho. What up, Mike Chacho?
What's good, bro? How you doing today?
I'm living, man. Life, man. What you know, bro?
I don't even know, bro. I don't even know. But one thing I do know is you need life insurance.
Definitely need life insurance, man. So we got a special guest today, Miss Katrina with Top Notch Life Group. How you doing today?
What's good? I'm doing great today. How y'all doing?
We blessed. We blessed. You know, just another day, just another life.
I feel you.
So, we wanted you to come on the show to explain the importance, especially to our community, about having life insurance. And you told us a little earlier that it's life insurance month, right?
Yeah, it's life insurance. So September is Life Insurance Awareness Month. So it's dedicated to strictly making people aware about life insurance. So this is a great topic. Our community, I'm glad you say that, because typically when I do presentations, and I know it's not a presentation, but I'm still gonna put that out there. Listen, 92% of African Americans die without life insurance. That means 8% of us only take it serious, or probably they done had it so long and they only paying about $5 from years and years ago that they keep life insurance. But 92% of African Americans die without life insurance, and that's big. Like, that's huge. It's a statistic. So just to give you a little background on myself, my name is Katrina Pierre. I am an agency owner. I'm an insurance broker, and I am a broker that's licensed in over 15 states. So I can pretty much service anybody. I have a huge team of agents that are under me. I started this journey 7 years ago. And when I started this journey, I started it with the mindset that I was going to help my people. So I got my first life insurance policy when I was 21 years old. I still had life insurance policy today. I started paying $15. It's still, I think it's like $25 now. You know, every now and then they'll see something to add on or whatever. So I still had that policy. And before I became an insurance broker, I was speaking with one of my family members. She's an in-law, but she was telling me how she used her life insurance to pay for my cousin's wife to go to college and to help pay for their wedding. So it intrigued me. I was 21 at the time, and I got the wrong policy at that time because I didn't know nothing. And that's what happened to a lot of people. You don't know nothing. Actually, she was given this information by a Jewish lady. She said that she was just happened to stop and be talking to that. They were on the beach. And they was just making conversation, and she told her what to do, how to get it, and boom, there it was. So I was like, dang, I'm finna get one. And then, as time passed and you get a little bit older, you notice that a lot of people die without life insurance. Like, nobody got life insurance. Everybody paying for, trying to scrape up money to pay for the funeral everywhere you go. If you live in the hood, it was a jar in the hood before the GoFundMe. It was a jar in the hood store. Okay, and corner with your picture on it, asking people to drop money in there to help bury you. So when I took this position and I decided to leave my 9 to 5, I took it with the attitude that I was going to help my community, that I was going to put them on and everybody was going to know, and we wasn't going to be the statistic anymore. We wasn't going to be the bad part of that statistic, right? We was going to be on the upside. But unfortunately, you can bring a horse to water, but you can't make them drink it. Right. And we all don't catch the bait. And sometimes they do, just not all at the same time.
Right.
So my goal is to bring awareness, is to let everybody know what life insurance does for you, what it can do for you, I know what it looks like to not have life insurance, and what an amazing thing it could do to have it, especially when a breadwinner passes away.
Right. Do you think in our community it's just a lack of knowledge, or it's just a lack of finance that we can't afford it?
So the can't afford it part comes with the lack of knowledge.
Mm-hmm.
So people think that they can't afford it. They think it's unaffordable, right? But it's really not. So typically when I sit down with people, I tell them, listen, affordability is my main goal, right? The reason why that is because most people overdo it. They overdo it. So as soon as an emergency come up, that's the first thing to go is the life insurance. I can't pay this life insurance policy. You know, so they don't want to pay the life insurance. So guess what? You let your life insurance policy lapse. That's number one. Now, number two, something happens and you ain't got no life insurance. And then they procrastinate like, oh, I can get it back. Oh, I can get it back. Oh, I can get it back, but never do it. You know that thing that you got to do, but you just never do it. That's what life insurance becomes to people once they lose their policy. And then something tragic happens and then, yeah, boom, there you have it.
Right, but is it a certain amount of years or time that you have to be paying on that policy for them to be able to use it, as far as like when the death comes? Because you can't say I'm about to buy insurance and then somebody just die like 10 days later. Is that still, do they still honor that?
So there's a thing called a modified policy, and then there's a thing called a 2-year waiting period. Now, with those policies, typically the person is in really, really bad health. So they're a risk to the insurance company. So the insurance company's like, hey, we're going to give you a policy, but it's going to be 2 years before you get the full-fledged value of the policy. So that means if you die within the first 2 years, the company is only going to give you whatever you put into it, plus interest, right? But you got to be really, really sick for that. Like you got to have some, HIV, you know, those things that people feel like you can't come back from. Or a terminal illness, something like that. Now, 2-year contestability period is something totally different. By law, the law allows every insurance company to contest your policy within the first 2 years. So does that mean that you don't get the money? Absolutely not. So the company just does their due diligence. They make sure you didn't lie on the application, everything that you said was true, and you know there was no funny business. So you will have your funeral probably by the time you get the paperwork and all this other stuff. You probably don't have the funeral which you paid out of your pocket, but your insurance coming on the back end. So which is one reason why I tell people don't lie on their application, because anything can happen in those first 2 years, right? You want your money, because if you have to come out your pocket, you want to be reimbursed. Right. So you want to make sure you don't lie on the application just to make sure it's a smooth selling. Now, a lot of people think that process is a long process, and sometimes it is. They think that it's the insurance company. No, I've dealt with a lot of deaths within the first 2 years already, within these 7 years. The doctors take their time passing that paperwork along to the insurance company. How many times I had doctors say, oh, we didn't get it. Oh, we didn't get the check. The insurance company even cuts them a check to send the information. So why would they be holding it? You get what I'm saying? They need the information to finish processing the claim. So I've seen doctors wait 2 months to even get the information over to the insurance company. Right. So
go ahead.
Once the insurance company get their information, it's good. It's smooth selling from there.
And I love what you're talking about now, and I'm glad you started a company, Top Notch Life Group, because is it something that, because I always thought about, you know, my dad always told us to get life insurance because we used to just party so much and wild out, so it just made sense. But is it like a race thing when it comes to some life insurance, and that's why you started? Because it's like they look at the Black community like, okay, they got high blood pressure, they thugging it out there, they eating all kind of bad, and you know, diabetes and stuff. You know, we ain't gonna give them that much insurance anyway. So was that one of your things also, as far as like you want to just educate our community?
Right. So here's the thing, right? When it comes to that, the reason why we need to know that this is the youngest you're gonna be right now today for the rest of your life. Today is the youngest you're gonna be. Whatever health condition you in, this the healthiest you're gonna be today for the rest of your life. And tomorrow is a whole nother day. But once you start having all of these health issues, and typically we have a lot of health issues, heart attack, strokes, high cholesterol, high blood pressure, things like that. It makes it even harder for you to get life insurance. And I don't want to say harder, It's just that insurance is based on 3 factors. It's based on your age, your health, and your gender. So the older you get, the more insurance becomes for you. The unhealthier you are, the more they tack on to the price. And typically, just like car insurance, males are more higher than females. Y'all more dangerous than us. So that's how they that's how they look at it. So you want to try to get insurance at an early age. At an early age. I even tell people that when they're working, because a lot of people get insurance because they don't get insurance because they have insurance at work. Well, when you leave work, remember, if you're not a part of some corporate business or entity where they're giving you the value of that policy because you don't own it while you're at work, that's their policy. They pay a portion of it, right? So when you leave there, you're now 65, 67 years old. God forbid, you probably gonna have some health issues. You know, insurance, when you walk out of that door, they're gonna either take the insurance policy away or decrease it in value because now you're gonna take it over. Then you pay it at market value at that time. So you 67. It's not $50 no more. It's not $20 no more. It's not that no more. So it's better to get it while you're younger and you healthy, and you pay the lowest price possible.
So let me ask you a question though, because everything you said is spot on. As far as generational wealth, because that what got me all into the life insurance. My wife basically kind of introduced. I always knew about it, but she introduced me to the other side where you can get money from it in the long run. And we see a lot of people outside of our community, young people that have houses that's trusted to them, vehicles, land, all these different things. And I ask a lot of people, especially Caucasian people, hey man, how you 18 years old, how you got all this stuff? And it was like, my papa left it to me, life insurance. So with that being said, just explain the importance of having life insurance for generational wealth.
So life insurance is also a benefit that you don't have to use when you die. Okay, right? We all know that when you die, life insurance is used to bury you or whatever. But you can use that while you're living. And how you create generational wealth in it, you don't just get an average life insurance policy. You want to get something like a UL, Index Universal Life policy, or do something towards infinite banking. And you able to set that policy up as a trust, right? To keep paying your family members out of it. So how that works, you get the policy, you're going to get a death benefit, of course, because it's an insurance policy. But that policy is designed for you to use as a savings. So a part of your premium that you pay per month is going into the index. So it's going into the market. And it's compounding off the last 10 years of the market. So that can go anywhere from 9 to 15% on your money, right? Versus when you put it in the bank. But it also wants you to, the policy also wants you to dump money in there. So the more money you dump in there, the bigger the cash value grows. On top of that, you get dividends too.
So basically it's a stock.
You said it's a who?
It's a stock.
Right. But it's a stock, but the difference is you participate in all of the gains. You don't participate in none of the losses. So there's a floor. Most companies have a 0% floor, where if the stock market drops, your money stay the same. If the stock market when the stock market goes back up, your money begins to shoot back up again. We got one company per se, their floor is 2.75%. So if the stock market drops, guess what? You still at least get that 2.75%. So you don't participate in any of the losses. All you do is participate in the gains. The great thing about those policies is that they're tax deferred. So you're not paying no tax on the money. It's not used as income from Social Security. So a lot of people be worried about what type of income they have, because that determines how much Social Security they're going to get, right? Well, this is not considered income to Social Security. Once you accumulated so much cash, you can do it from the beginning. I always suggest people do it from the beginning, especially if you're doing it for generational wealth. You can use this money over and over and over again. If you have $20,000 worth of interest in that policy, and you decide to take 10, this policy is so phenomenal. These policies, it still compounds. The interest compounds off the 20,000, not the 10 that's left.
I didn't know that.
Yeah.
Right. So, go ahead.
No, go ahead.
No, I was going to say, as far as that policy and the requirements for it, is it a certain amount of money that you already have to have up front to be able to have that type of policy?
No, there isn't. Now, do people come with a lot of money? Yes, some people do. They ready. They know where they want to put their money. They know what they want to do with this money, obviously, already. They know they got plans. They already see the growth, because we do illustrations for you to show you the growth of the money. You know, some people just come with their first premium. That's all they got. They want to just get started somewhere. They come with their first premium. I just advise them, listen, throughout the year, you know, you get your income tax money, you get a lump sum of money, whatever. If you saving $500 a month, you can put $100 in the bank.
Mm-hmm.
But that $4, you want to put over here.
Right.
You want to keep that money safe, and you want to keep the interest growing on that money continuously. The bank gonna give you 0.01%. You trying to get them as much bang for your buck on this money. That's the purpose of saving. So you look at people like Rockefeller, right? Everybody know who Rockefeller is. And Rockefeller right now today still pay 362 of their family members off that one policy.
Mm-hmm.
And all they did was, the grandfather did was put it in the trust. Vanderbilts did the same thing. Only difference with the Vanderbilts, they left the money in the hands of the son, who was very irresponsible. They blew that cash.
Right.
But Rockefeller, they had a whole setup. And to this day, in order for their family members to borrow money, to do anything, they have to come correct, first of all. And whatever they taking the money for has to be whatever their guidelines that they put in place already. So it has to be that. Like, you just can't come for anything. It has to match that. So people like Candy Burris, she said when she retired at 40 years old, somebody came to her at 26 when she had her daughter. They told her about the policy. She started using the policy. That's what she was dumping her money. At 40 years old, when she decided to retire from the industry, that's the money that she used. Same as Waka Flocka. People look at it like, I'm never going to have that kind of money. It's never going to grow that big. And it's probably not, because you don't have Candy Burris money. You get what I'm saying? We don't have Rockefeller money, or you probably don't have the Vanderbilt's money. You don't have these people money, but you have money at your level that can help put your family and your kids in a better position. That money that can be utilized while you're living. And when you gone, it can just be passed down from generation to generation. As long as you have a trust, and as long as you have something in place and give it to somebody responsible enough to live out whatever it is, you got it. And that's typically what people do. McDonald's started off a policy. Walt Disney started off a policy. All these people utilize their policy. Other ethnicities utilizes the systems that's in place.
Mm-hmm.
Right.
We just got to start doing it. We just got to start utilizing. Like, I had a Caucasian gentleman tell me one time, what they did was they took the oldest person in their family and they put as much insurance as they could on that person.
Mm-hmm.
When that person passed away, they took the money, and the money bought an apartment complex. So the apartment complex now is owned by the grandchildren. The grandchildren now reap the benefits from the apartment. Like, they just do things differently than us. We have the same tools and we have the same resources. We just don't use them. We don't use them. And I mean, if I could be quite honest with you, I've been doing this 7 years, and I know people have been doing it longer than me. But people they live for today. They live in the moment. You know, everything else is way more important than thinking about what, 10 years from now, what's going to happen 20 years from now. We in an inflation.
Right.
We need to think about how we're going to set our money up to still be living comfortable.
Mm-hmm.
To be able to afford the gas prices. to be able to afford milk, a loaf of bread. I mean, everybody already complaining about the cost of groceries. So if you complain about it today in 2023, what about in 2033?
Exactly.
Right. No, I
Especially
definitely
the dollar getting weaker and weaker also. So
Right.
start growing your own food.
And then they look, Florida just cut everybody from their food stamps and Medicaid.
Jeez. Oh,
Yeah.
no, I didn't know about that.
They cut a lot of people from food stamps. They cut a lot of people from Medicaid and put them on shared costs and tell them that you got to pay half and we'll pay a little bit too.
yep.
Yeah. So go ahead, Mike.
No. I was just agreeing with what she said because I heard about that too.
Yeah. Well, hey, listen, they better learn how to grow some food or something. I don't know what to tell them. Gotta figure it out, man. But one thing I was gonna ask you, as far as the policy and everything goes, what would be a good coverage like amount to like protect your family, as far as just protect your family? Is it like a certain amount right now? Because I know, like you said, inflation going up. I mean, everything's just getting higher. What would be a good amount to be like, you know what, we'll be comfortable if we just start right here?
So if you're the breadwinner of the family, I would say always get anywhere from 5 to 10 times just your annual income, right? You want to get as much money as possible. So especially if you're healthy, whatever they giving you, take it.
Mm-hmm.
So it's not like I don't have like a set amount. Like, no, whatever times because you paying bills. You think about it, you married, you got children. If you pass away right now, it's an income going out your house.
Mm-hmm.
Big time.
That income is gone. And that income help with food, help with shelter, help with utilities, get the kids through school, clothes. I mean, everything you can think of. You still want your family to be able to live that quality of life.
Correct.
I mean, you get some people, they don't care. But I mean, if you that person, like I always tell people, you can't tell me out of one side of your mouth that you love your family, and on the other side tell me that you don't want to get no life insurance.
Yeah, that don't make no sense, because anything can happen at any second. And going back to what you were saying about how people have life insurance through their company and through their job, let people know how important it is to have side insurance also, or have just multiple insurance as well. Because me personally, I have through my job, and I have a couple of them on the side also.
Right. So why this important, right? One, you don't own that policy. It's not yours. That's number one. Number two, if you decide to leave, you get fired, terminated, or when you retire, you no longer have this insurance. Most times people don't have the insurance anymore because a lot of people leave their jobs or they get fired, right? So you need coverage on the outside that's going to protect you in that in-between time, but you find another job or not. You also want to make sure you have a coverage so when that coverage do end, even if it is in retirement, you already paying the lowest price ever, right? You got it way before you retired. You got it before any illnesses, high blood pressure, cholesterol, diabetes, or whatever. I'm not wishing it on nobody, but it happens. So you got it well before any of those things could have taken place. So your insurance, you won't be on that 2-year waiting period, and your insurance prices won't be sky high through the roof. Okay. So that would just be the very importance of having it on the outside. And if you got a spouse, most times they only give you like $25,000 for your spouse. You want to make sure. Yeah.
Do the job. Yeah.
Yeah, you want to make sure you have enough coverage on your spouse as well. So if something happens, shoot, I got about $2 million on. Every chance I get, I need to stop. But every chance I get a new life insurance policy. So just because I just want to make sure that if something happens, that we okay, that we fine. I mean, even with my dad, and everybody have different situations. The house that I live in, my dad gave me that house, inheritance. So I inherited, but it's still some things that need to be paid on this house. So if my dad passes away, trust me, we got enough life insurance coverage to make sure that things get done.
Yeah, and that makes sense. Right, and that makes sense. I had one more thing too, man. Cause I know you said it was based on, you know, race and your gender and everything. And you know, we live in a real, you know, different world now. So what about transgenders? How do they base it on their birth gender? Or what they
on your birth.
what they believe in? You see
It's,
what I'm
unfortunately, it's on your birth. It's on whatever it is at birth. When the coroner come pick you up and they put that birth certificate, it's definitely not gonna say transgender. It's gonna
That's
say,
a good question, though.
yeah, it's gonna say male or female, and they do whatever happens at birth. I mean, and no, there's no discrimination. It's just legal work, legal paperwork. You got to understand that part of it. If the LGBTQ community can change that, so be it. But right now, that's what it is.
Okay.
Cool. What's the difference between term and life?
Whole life. So term is a temporary policy, right? Term is pretty much what you have at your job. It's temporary as long as you're there, you have it. On the outside, they give you those 10, 15, 20, 25, and 30 years. 30 years is the highest. When those years are up, typically your policy is up. People are so scared of term, but don't be. I have several term policies on me, on my kid, on my oldest daughter, and my husband, right? Because term is gonna give you those hundreds of $1,000s that you're looking for. But insurance have evolved so much that now when those years are up, the term is up, you can get all your money back. So we like to look at it as a savings, right? So if you put $60-some thousand into that policy, you're going to get all that back. Because see, term is only designed for, to me, term is designed to replace income. It's an income replacement. So in 30 years, you got kids, you married, got a home, you paying for it. In 30 years, your kids should have now grown to an adult, so they're not needing you anymore. The older you get, the less your bills should be. By then, your house should be paid off, so that if you never had to use that term policy, it served its purpose. You get what I'm saying? It was there to make sure that if something happens to me, my family is okay. While they need me fully, it's okay. They're fine. But once it's over, then all of our policies give you your money back that you use. And then the good thing about the term that you don't use. So the good thing about the term too is, let's just say if you get sick, anything happens to you critically, chronic, or terminal being the worst, meaning that the doctor give you 12 months to live. You know, people get multiple sclerosis, ALS, they have cancers, heart attacks, strokes, you get into a bad accident, you can't perform 2 or more of your ADLs. That's your activity days of living, meaning somebody got to feed you, clothe you, bathe you, things like that. What a policy will give you a huge percentage of your money, or they'll pay you monthly, depending on whatever you work out with them. You're able to touch that life insurance policy so that you can continue to live and pay your bills. For instance, when my dad had his stroke, it took 3 years for him to get approved for disability. They deny you so many times before they actually give it to you. So we had to go get a lawyer pro bono to get us approved, and then we paid them on the back end money that they gave, but it take a while. So in the meantime, he was dependent on us to pay bills, to get him food, to, you know, so he can live. But if he had a policy like that, he wouldn't be dependent on us. They would have gave him a couple $100,000 so he can continue to live.
Right.
So term, that's term. So people get scared of term, but even though it ends, it has huge benefits to it. Now, whole life is just exactly what it says. It's for your whole life. Your remaining term in your life, as long as you're here, you have that policy. It don't end. The policy amount don't change. The premium don't change. It don't go up on you. It doesn't cure a little interest in it. People think that, oh, I want a whole life policy because I can borrow money. Well, it grows like a snail. As fast as a snail walk, that's how that money grows, right? That's not, when you see people say they borrow money from their whole life, they might have had that policy about 20, 25 years. It grew, and it's never gonna grow past the face value of the policy. So it's 25,000. It's never gonna grow past that. So imagine being 30 years old with a $25,000 policy, and the average age they give you to live is 80. You got from 30 to 80, that's 50 years to grow to $25,000. Like, it grows really slow. But it's a great benefit for older people who's looking for something permanent. Right? They like stability. So it's really great for older people, and it's really good for people because we have a lot of young people with bad heart issues, with diabetes issues, you know, things like that, where they can't get approved for a term. So they'll definitely need a whole life. So every policy, people usually ask me which one is better. Until I have a conversation with you, I can't tell you which one is better for you, because it all depends on everybody's individual situation.
So can you turn your term policy into a whole policy?
Yes. So we actually have one company, which is Mutual Omaha, because I work with over 50 plus A-rated companies. So we have Mutual Omaha, and Mutual Omaha will allow once you term out, you can either get 100% of your money back, or you can get a reduced paid up life insurance policy. So what that means, so you may have $150,000. These are just examples. You may have $150,000 in coverage throughout the term. When the term is over, if you don't take all of the money back and you just want insurance, you never have to pay for life insurance no more. But it's gonna reduce to $75,000.
Okay.
Right. So that's one of the policies that you can convert. Some people notify you about 3 years or 3 months or 6 months. Every company is different on when you like, listen, hey, you need to convert this policy over or whatever. And it's really up to you how you want to do it. But yeah, they do convert over.
I got a question. So say for instance, you have a policy on somebody and they have a overdose, or they was drinking and driving, something that it was basically they did it to themselves, kind of, sort of. Does it still, that life insurance still cover them, or
Absolutely.
is it like, okay?
Yeah. So as long as anything after 2 years, the insurance company cannot question you. They can't question you. They can't do none of that. They just got to pay the money. Even suicide.
Okay, that's what I'm about to ask. Even suicide too?
Even suicide. So people commit suicide after 2 years of having that policy, they pay out. It's just what it is. There's a suicide clause, and that's the clause. As long as you've had the policy for 2 years.
At least 2 years.
I didn't even know that. I didn't even know that.
Me either, because I was thinking about jumping out of a plane the other day. So
I was just gonna say, don't be.
we good, y'all. Just want to let y'all know. Hey, so listen.
Rich people do that shit all the time. You know what I'm saying? They be in bad situations. They done got their family involved, the money tight. They stressed out. They end it all because their family gonna get the money and all their inheritance. So, and they'll be okay.
Yeah, that's crazy. Yeah, I wasn't trying to end it all. I hope they give me a parachute at work. But listen though, one thing. So how difficult it is to adjust your insurance? You know, say like, you know, I had it for 5-10 years. Do y'all do like physicals every time you want to adjust your insurance?
So no company that I have does physicals. We don't do that. We do no medical. We do non-medical. So whenever you want to increase, it just go based off the original process.
Okay. And so if you with a company right now and you want to, like, is there any way you can transfer that, what you've been paying for so many years, to another company? Is that a thing, or that's not? Okay.
No, you can't do that. Now let's just say you have a policy with some interest in it, with some good interest in it. You can surrender the policy, take the money. So a lot of people, this is where they lose. They may have an insurance policy for forever, and they find something better, or they think that's better, whatever the case may be. I don't know. They cancel the policy versus surrendering the policy. When you surrender a policy, any value that's in that policy, they have to pay it. But if you cancel it, they don't have to pay nothing.
I never thought about it.
Yeah. They don't have to pay you nothing. Now, what you would do if you have some good money into it, you want to take that money, dump it into another policy that's going to grow interest for you. And yeah, that would be a good idea. But just the transfer, like from company to company, no, you don't do it like that. Another thing I wanted to say too, I want to put out there, like people think because they have health issues that they can't get life insurance because people been denied a lot of places. That's why it's good to work with an insurance broker like myself. Not some people who are insurance agents, they work with one company. So whatever that company is offering, that's all they can offer. So if the client gets declined, that's it. It's nothing else they can do for the client. However, in my situation, I don't necessarily work for one company. I'm contracted with several companies. So I work for my client. I go with whatever company is gonna qualify you. So I'm a breast cancer survivor, and I'm 41 years old. This is important. People think they have time. I can no longer get a term insurance policy. So whatever policies I have, those is what I'm stuck with. I better make sure I pay them so I can have them. I'm stuck with those policies. You can't, once you start having health issues, it's harder to get those hundreds of thousands of dollars. You kind of stuck with the 20, 30, 40, $50,000 in coverage, right? People need to know that it's, even though that's your that may be your situation, you still can get coverage. It's still possible, and you still can get same day coverage. It just all depends. But when you're working with one company, it is more harder to get a client insured versus when you're a broker and you work with several companies. You want to make sure that, you know, they can put you, they have options for you, because every company is different. Every company have different requirements. Every company, some companies are more liberal than others. Some will take health issues that other ones won't take, you know, and they're okay with taking that risk on you. So I just want to make sure I put that out there. Like, even if you decide to get insurance anywhere and it's not with me, make sure that that person is an insurance broker so that they can show you several options and they're able to get you qualified somewhere.
Okay, that makes sense.
I got one more question. Okay, so I already understand that physically, you know, they take that into account a lot as far as insurance go. But like, say for instance, you're in tip-top condition physically, but you mental health, like you just got a lot of mental health issues. Do they take that in consideration also?
So, I mean, again, once you start having serious issues, like when you think of mental health, you think of endangerment. Like, these people are in danger to themselves and to others, right? Because at any given moment, they can spaz out. Yeah, an insurance company won't take you, but they won't be the best candidate for like a term policy. So a lot of people do that. Like, they come and they like, well, I just got depression, or I just, you know what's funny? People got to stop doing this. You got to stop doing stuff to get a check from the state, and then you come down and then you're like, well, I ain't nothing wrong with me. They just give me medicine, but I don't even take that medicine, but it's in your history.
It's in your history. That messed me up one time.
Yeah, it's in your history. The people don't know you and you don't know them. But what they see is that you got some depression medication going through your pharmaceutical report, or you got some bipolar schizophrenic medication on your report, and that's all they know about you. So based off that, this is what they're going to prove you for. You get what I'm saying? So a lot of people take that for granted. Like, I remember working with this client and her baby daddy or whatever, and she like, oh no, he's fine, he's nothing wrong with him. Da, da, da. So I'm like, okay, so they declined him, and she was like, let me call him. So she was like, you taking medicine? What's wrong with you? You ain't nothing wrong with you, right? He said, oh, you know, they give me that, I take that bipolar. Ain't nothing wrong with him, no. He go down there for a check. And it just messed her up, because she thinking she gonna get some insurance on him to have additional income for her kids, you know, if something was to ever happen. All the while this nigga getting a check. Sorry, he getting a check from the people. He getting a check from the people, you know, just and doing something he ain't got no business. So be very mindful of what you telling the doctor just to get medication or just to get for your benefit, because it affects you in the long run.
And it's hell trying to get them doctors to take that stuff
Take
off.
it off. Yeah.
It's
hard. It's hard to get them to take it off.
That's part of the game. I had another question though, because I know a lot of people look at insurance and be like, it's for adults, it's for older people. How important is it to take out a life insurance on your child? You know, should we have life insurance on our kids also?
Very important. Your kids get in the car with you?
Oh yeah, most definitely.
They
Definitely.
travel with you, they get on planes, they go to the park, they go to school without you, shootings in the school,
Yep. Yep.
you know, car accidents, accidents around the house, things happen. Unfortunately, we would not like to think of our kids that way. We want it to be the opposite, but things happen. So if you stay ready, you ain't never got to get ready. And I would rather be prepared. And I always say this, if I'm crying in mourning, the last thing I want to be thinking about is how I can't pay for it.
Exactly.
Yeah, like that's a whole nother cry and mourn. You get what I'm saying? Like it's just a deeper hurt at that point because I don't even have the money to put you away nicely or to do whatever is necessary to, to get it done. So it's very important that you do it on your children and you keep it. And I will say, if you wanna think of it as mindset, well, don't get a regular policy. Get them an investment policy and look at it as their investment. Give them a policy that's gonna grow cash value for them, that you really got this policy so when they get ready to sweet 16, buy a car, graduate, buy a house, whatever, they have the money already. That's why I got this policy. I don't have it because I'm thinking about I may have to bury my child. So if you want to give them something and if you can afford to do it, get them an investment. Set your kids up. Start them off young. I have a couple right now. They pay $500 a month for each kid. The kids are actually 19 and 21. They don't even know that the parents got that policy. Their plans is to give it to them as a gift when they turn 25.
That's dope.
Because of the cash value will be already built in there. And as far as young adults, well, guess what? They die faster than the older people.
Right. Right.
You know what I'm saying? So if you have young adult children, you keep insurance policies on them. Not only do I have a regular insurance policy on my daughter, I keep an accidental death because she's always in the streets. So I keep an accidental death policy on her. I don't think nothing gonna happen to her. I don't wake up wishing nothing gonna happen to her. But in the event of, I made sure that we are fully covered and that I have something, because young people don't think of it like that. They think they have time. And all the time, people don't have time. And if I could tell this real quick story real quick, because this get real serious for me. I take this very serious. I had an agent working for me. She was younger, so she had the younger generation's ear when she was doing her life insurance policy. She actually signed a young lady up and her boyfriend. And the young lady called her one day and was like, I'm going to Black Ski Weekend. I need to cancel my policy. So she's like, no, don't cancel the policy. Just set it back, another day, this and that. But she was like, no, I want to cancel. We don't even need it. We young anyway. We ain't nothing gonna happen to us. Well, about 3 months later, her boyfriend was driving down the street, speed racing. I don't know what he was doing, but he ended up running into a tree and killing himself. And she ended up calling her and asking her, can I pay something to get the policy back? Like, no, it's over. It's literally a wrap now. Like, you should have kept the policy. So even as a young adult, it's so important that they have life insurance. They may not understand the value now, but as they get older, they will. And guess what? They will already have something in place. When 21-year-olds and 22-year-olds come to me, I kind of pivot to that. Where your mama? Where your daddy? Because they gonna make sure that it's paid and they're gonna make sure that they keep it. So yeah, it's important.
And it's very important. That makes sense because, like I said earlier, that Dad made us get life insurance.
Right.
The way we were living. When we was in college and high school and stuff, we were really wilding out. So he was like, "Hey, listen, you ain't gonna get some life insurance, bro. We ain't got no money." You know what I'm saying?
I wasn't wilding. You were wilding out, bro. I wasn't wilding out, bro.
A lot of spring breaks. I'm telling you, we had a great time. But it did it does make sense. But and I feel like, if you can go party and you can go on these vacations doing this, you can afford life insurance. It doesn't really cost much. Even if it's $40 a month or whatever, that's nothing because you spending that on, whatever.
Listen, when I think about my insurance, if I'm spending $200, I blow that. I blow that times 10 in a month, like blow it. You understand? Easy. Just you walk outside, you spend $1,000. I don't know. Like, it's just, easy, you know.
Damn, cuz you balling, ain't you? Cause I ain't spend no $1,000 every time I leave out the house now.
You spend it easy though. It's just like it's nothing. It's like, so if you can get a $50 policy or a $40 policy or whatever, come on, you pass up that fast food this week, or don't you know what I'm saying? The little things that add up. Like I look at my expense report all the time, and just 2 weeks ago, I made a decision that we was not eating out, because the eating out about $600-700 a month for just lunch and stuff. Right. It was ridiculous. So I know that if I can blow money on stuff like that, I can definitely afford my life insurance policy. And it's just like I said, it's mindset. And if people change their mindset, they'll look at it differently too. They'll see the difference. Like, just put that $40 to the side, put the $50 to the side. But what's more important? I always say this, it's been times where I ain't getting my nails done, my hair done. People don't see that part. They see the glitz and glam, but where I don't do a lot of things just to make sure my bills are paid, or just to make sure I'm gonna come last and I'm gonna do it. And it's, if you put yourself in that mindset, take care of everything you need to take care of first, and everything else come later, and then it'll work itself out. But life insurance is affordable. Kids, these policies start at $3 if you just do a basic life insurance policy.
Yeah.
$3. They start at $3. You mean $3 a month? You want to insure your kids? $8, $15, whatever it is, you wouldn't insure your kids.
Yeah, and that makes sense. Just one more question on my end is that, so how much does it really cost for a burial? A lot of people be like, okay, I'm just gonna get a $5,000 life insurance, but these days, man, it's like 10,000 on up, right?
So after COVID, the average cost of a funeral before COVID was $8,000 for an average funeral, that's burial and everything. Now, since COVID, the average cost of a funeral is $13,000-15,000.
Lord, better put that thing in the ditch.
It's expensive.
Burn me, baby.
Well, look, you still gotta pay to be burned. Guess what? Yeah. My cousin died. Our cousin died. BJ. That was $7,000. That's just for cremation and the tradition and a funeral, like, you know, to have everything, but no burial, no nothing. The burial is a whole nother ball game. When you get to that grave site, those people ain't taking no payment plans. They not, no, that's a whole nother ball game. Like, literally, that's another almost $10,000 by itself. Opening and closing. Open costs $500. Closing costs $500. It's not one set price. Everything has a tedious price to it. So it's actually, we just got it. I wish I could just look it up real quick, but I don't want to take that much time. We put a list out. It tells you at this year, by year, how much the funeral is going to cost each year, and it's escalating each year. So you just always want to make sure you have enough coverage. Policy reviews, reviewing your financials, all that is important to make sure that you have enough coverage.
Do the insurance cover not the insurance, but do the policy cover the funeral before the funeral, or you get that after, you know, some time after the funeral? Like,
so
you know what I'm saying?
As long as you have it the longer than the 2 years, it's all you have to do is go there with your policy number to the funeral home. All you gotta do is go with your policy number, and they're gonna deduct it from the value of the policy. And then once the funeral is over, typically after the funeral is over is when people get the death certificate. You have to show proof of death so they already giving you this money without you even showing proof of death. So, but once you show proof of death, which is the death certificate, then they'll cut you the remaining balance of whatever's left.
So I read a story not long ago about being buried on your land. Is that a tax write-off? Do you know of?
I don't know if it's a tax write-off.
You trying to get buried like a dog in your yard?
But I do know different states, different cities, different counties have their own rules and regulations. Like, that's not something that happened here in Florida. But I was in, I can't remember the name. It was Georgia. I was in Georgia. I think it started with a C.
Maybe Columbus or something.
Not Columbus. It's real country.
Coolidge, Georgia.
I can't remember. It's by Albany. It's not far from Albany.
Oh, Cordell.
Cordell. So I was there and I went to a funeral there and they buried the people right there. I mean, but everybody was buried there. So maybe that's something they do. You come here to Miami, you can't do that. You got to utilize the funeral homes.
That makes sense. That makes sense. Mike,
Yeah.
you have any?
I just want to say I appreciate you coming and educating us and giving us this nugget, this knowledge, this way to make money, and set our family up for the future. And if people don't understand how to do this, then they don't want to do it anyways, right?
Right. I thank y'all for having me.
Before you get off, please let everybody know how they can reach you.
So you can reach me by email. My email address is katrinap@topnotchlife.biz, or you can contact me 954-600-4036. My Instagram is ffltopnotch, ffltopnotch. And so is my Facebook, is ffltopnotch. So you can reach me now on any one of my business pages or my personal page, which I'm always on, and that's just Katrina Edwards Pierre. And you can hit me up either way, and I'll respond back to you. If not, my assistant, she's always really on top of things. Trust me, she'll respond back to you probably faster than I could. But you can reach me there. And listen, it's Life Insurance Awareness Month. Anybody need policy reviews, you have questions, you're not so sure, you need somebody to break this all the way down to you, give Top Notch an opportunity to do that, because we provide top-notch service. Our clients is our #1 priority, and there you have it.
Yeah. So hey, once again, we definitely appreciate you coming on our show, and once again, we appreciate everybody catching our show. And I Don't Even Know Bro podcast with your host King God and your other host Mike Chacho. What up, Mike Chacho?
I don't even know, bruh.
I don't even know, bro. Thank you once again, Katrina. Appreciate you.
Thank you,
All right,
cuz.
thank you.
Mike Chacho, King God, what it is.
I don't even know, bruh. This I don't even know, bruh. This I don't even know, bruh. This I don't even know, bruh.
I don't even know, bruh. Yeah.